what are the tax incentives we will provide to exporter, that we will discuss in today's class. Let's move to one by one. We will go. That is under this one. Okay, income from newly established unit. Okay, income if you generate from new business or unit in special economic zone, that is section 10 EAA. It comes under section 10 EAA of income tax 1961. That is, it is, states that who is entitled to get this type of deduction. Okay, who is entitled to get this type of tax provision. Suppose if you are starting a new business in special economic zone, that is, if you have to satisfy few things, that are, it have to be begun. Okay, you have to begin your manufacturing or produce article or things, or produce any services including computer softwares after 31st March 2005 but before 1st April 2020 in any special economic zone. Wherever if you want to, you can start your new unit, okay, which is doing export business. Then next one is, it not formed by splitting or the reconstruction of existing business. It tells you that suppose you already have one business in a special economic zone and you are not eligible to take deduction and you are not eligible to take provision. In case what few member will do, they will start another business, okay, which satisfy, where you will produce article or else you will provide services including computers software to get provision, to get tax intensive. In that occasion you won't get anything, because you are not starting your business, you are not starting new business, you are altering, okay, you are reconstructing of existing business, you are reconstructing. Because of that one, you won't get any tax provision. Or else splitting means you have a huge industry, okay, what you are doing, 50% I will be provide to new economic zone and 50 remaining we will do existing business. In that case also you won't get, you are not eligible, okay, you are not entitled to get deduction. Then exception, in few occasion, discontinued due to damage from natural calamities. Okay, suppose natural earthquake, something happened, after that one your existing business is just destroyed by natural calamities. In that occasion, or accident, fire, something happened, in that occasion within 3 years if you start new business, then you are eligible to get tax intensive, okay, then you are eligible to get tax incentives. Then third condition, not formed by transfer to a new business of machinery or plant exceeding previously used. Okay, if you are starting new business but you are utilizing previously used, okay, old second hand machinery, in that occasion also you won't get any tax incentive. But if you suppose if you are taking second hand machinery, means it not have to be, okay, it doesn't have to be exceed 20%. In that occasion you can. Or else if you import machinery, okay, if you import second hand machinery to India, in that situation also it is not treated as second hand machinery in India, because it is used earlier. Now moving to next, quantum of deduction. Okay, what are the deduction you will get if you satisfy three condition, means what are the deduction you will get? First, that is 100% from export of such article or things, or from services for initial 5 years. That is, for 5 years you will get 100%. Okay, suppose you are earning your profit is 10 lakh rupees, means you don't have to pay any tax. Okay, you will get 100% deduction on export, only on export, and 50% for next 5 years. Okay, it is not limited to first 5 years. After 5 years, okay, first 5 years you will get 50%. Then next, for next 5 years also you will get, that is 50% of such profit or amount transferred to special economic zone reinvestment allowances reserve account. That is, if you maintain reserve, that is special economic zone reinvestment allowances reserve account, if you prepare, then the amount how much you have invested, that is you have kept in reserve, or such, that is your business, 50% of your business which profit, whichever is less, that much incentives you will get, that much deduction you will get from your tax. Okay, government provide this much. Okay, that is totally they are providing tax intensive for 15 years. First 5 years 100%, next 5 years 50%, another if you want another 5 years, means you have to invest in your reserve, you have to create reserve. After creating reserve, you will get, okay, if you, how much you have maintained in reserve, and 50% of your export profit, in that one you will get 50% of deduction you will get for next 5 years, that is total 15 year you will get deduction. Then now suppose, sir, now if maybe you can ask me, sir, we are maintaining reserve now, how we have to utilize this reserve? For answer for that one is in next slide, that is how we have to utilize this reserve fund. Okay, suppose I have invested 1 crore rupees in my reserve account. How I am supposed to be use this account amount? That is, first you have to utilize this amount by acquiring plant, that is purchasing plant and machinery for business within 3 years. That is, within 3 years you have to get plant and machinery, you have to purchase from that amount, or else, that is, until acquiring all machinery. Okay, suppose you think, okay, I have a 3 years time, by purchasing this one plant and machinery, I have 3 years of time. Till then, whether maybe I can pay my dividend to shareholder, I have that much amount, no, I will transfer and I will pay to dividend. As a dividend I will distribute to equity shareholder. No, you can't do that things. Okay, you have to purchase plant and machinery only from that amount. If reserve amount is utilized other than the specified above, that is other than the specified above, if you use somewhere else, then the amount so utilized is taxable. That is, how much amount you have utilized, that amount, that much amount is taxable. And if plant and machinery not acquired within 3 years, means the remaining amount of reserve account is also taxable. That is, if you want to deduction, means you have to utilize this amount and you have to purchase plant and machinery, then only you will get deduction. Then moving forward to next, that is exception regarding period of deduction. That is 15 years they are providing, no, in few occasion you won't get 15 years. Let's see which one. If unit have claim deduction under 10A, it should be entitled to deduction only for an expiry period. No, maybe you can ask me, what is this under section 10A? That is, under section 10A of Income Tax Act 1961 specified that it is relating to free trade zone. If you earlier only know, if you start your business in free trade zone, means you will get 10 years. Okay, and same, okay, it is 100% deduction you will get for 10 years. Okay, from 10 for 10 year you will get 100% deduction. Suppose you have utilized maybe 5 years you have utilized again, because free trade zone is transferred to special economic zone. In that occasion you only get remaining 5 years. If before converting this free, if you have utilized 5 years in free trade zone, means in a special economic zone you only get the remaining 5 years. For first 5 years you won't get any deduction. That is, for total 15 years you can't utilize, only 10 years you will get amount. 10-year period you will get for deduction. Then where a unit initially located in free economic zone or export processing zone, then it is relocated to special economic zone, then unit should get deduction for unexpiry period. That is same like we have discussed earlier. Because of transfer, if you have utilized free trade zone or export processing zone, if you have utilized 5 years, means remaining 5 years you will utilize here. Suppose you have utilized 8 years, means remaining 2 years you will utilize in section 10A. Let's move to next, that is how they will calculate profit. How we have to calculate profit? Computation of profit under section 10A, that is profit which arise from export turnover, that is total turnover. You don't have to consider, you have to consider the turnover which is relating to export. That much you have to consider. Then the profit and gain from service render outside India is also entitled. Okay, the profit or service entitled, if you are making services outside India, that also you have to include, that amount also you have to include, you have to treat as profit. Then where the goods held for purpose of eligible business are transferred to any other. Suppose you have two business, you have uh, in special economic zone you have one business, another somewhere, okay, other than special economic zone you have another business. um, Suppose you have transfer, or else for another country you are transferring goods, okay, because both businesses run under your ownership and you are not purchasing that one, okay, from one unit to another unit, you are transferring eligible goods. In that occasion, assessing officer have power. He will search, okay, when you have transfer, suppose on 10th April, if you have transferred the goods on 10th April, means he will look into market, okay, on 10th April, what is the value of that machinery. Like that he will assess the amount, then he will prescribe. If it is not easily calculatable or accessible in that occasion, reasonable basis, on reasonable basis he will increase your profit or gain. That's how you have to calculate computation of profit. Now moving further to how when this benefit will be withdrawn. That is, no deduction shall be allowed under section. If you are utilizing under section 10 EIA, means you are not eligible to take any deduction under section 80 IA. Now, what is this 80 IA? 80 IA is a deduction in respect of profit and gain. Okay, any deduction or gain, okay, you are getting from deduction in respect of profit and gain from undertaking or enterprise engage in infrastructure development. That is, in infrastructure development, this 80 IA will come. This is also development of infrastructure, infrastructure development in backward area, that is comes under 80IB. Okay, this both benefit, if you are getting any benefit, means you are not, suppose if you are starting new business in special economic zone, means you are not eligible to get two benefit. Okay, you only get one, that is section 10A, you will 10A you will get, and this both you won't get. Then unabsorbed depreciation, unabsorbed capital expenditure, and unabsorbed capital on family planning, okay, relating to relevant assessing year before 1st April 2006 will not be carried forward. If any above points is there, okay, any unabsorbed depreciation, capital expenditure on scientific research, and capital expenditure on family planning is there, that is not carried forward. Set of loss, okay, before business loss or loss under head of capital gain relating to business can be carried forward, okay, it is allowable. Then another thing which we have to discuss under this one is amalgamation or demerger. This I already have explained. Simply I will tell you, okay, same as discussed in section 80 IAB, that is comes to amalgamation, no, that we already have discussed. Under this one, what they will tell you, that if amalgamated company is Indian company, means you won't have to pay any. If amalgamated company is Indian company, means you don't have to pay tax. Hope you have understood today's session. Meet you in next class with another interesting topic.